All right, what's up, everyone? Welcome to today's workshop, today's webinar. And in this one, we're going to be talking about market structure and trend trading. So they kind of go hand in hand, right? You need to identify market structure to understand what the trend is. And then I'm going to show you some techniques on how you can actually, jump on the trend and stay in the trend for as long as possible. So before we jump in, we're going to just run a quick word from our sponsors, and then we're going to take a look at the, how to actually trade the trend.
Prime XBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XBT in minutes.
YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at thebirbnest.com/bistro. Equinix is a NASDAQ-listed digital assets company offering crypto exchange, custody, asset management, borrowing and lending services, and more. Enhance your crypto wealth today at thebirbnest.com/Equinix. The Change DeFi app allows you to become your own digital bank with automated financial services that give you complete control over your wealth while enjoying 100% freedom and security. Sign up today at thebirbnest.com/change. Join over 10 million users trading on Crypto.com, the world's fastest and most secure crypto trading platform. Earn up to $50 of CRO with the code CryptoBirb when staking at thebirbnest.com/cryptocom. Lease Capital is the first launchpad on Arbitrum. Get access to early investments in the most promising projects at thebirbnest.com/leasecapital. Eureka helps creators protect, manage, and monetize their work with the power of blockchain. Secure your rights and your revenue at thebirbnest.com/Eureka.
All right, nice to see so many people in here. I would like to thank you all for the wonderful comments after the webinar yesterday. So as you know, I hosted a webinar yesterday evening, not that long ago actually, and we talked about. Actually, I can't remember what that webinar was about, but it was a really good one and a very important one. Yes, risk management. Yes, a very important webinar on risk management. If you haven't seen that one, check that one out, right? So I really do enjoy all the positive feedbacks and the fact that I'm getting a lot of DMs and stuff that where you actually tell me that the stuff that I'm giving you is actually working. That is the important part here. I'm not only trying to give you. I'm not doing this just to do webinars. I'm doing this so that you guys can take the knowledge that I'm giving you and actually start trading on your own, because it's a fantastic feeling when you actually start to become profitable, and it's just such a nice feeling of freedom. You know what I mean? When you can just go into the market and just grab whatever you want, and the idea of just being here, just observing the market and just waiting for the right opportunities, and you literally, like, when you become a professional profitable trader and you have been trading for a while and you start trading on intuition, right? You can literally just go into the market and take money as you wish. I know it sounds weird, but you will come to that point when it's really, I'm not going to say it's easy, but it's like you are entering that flow state of mind, and the setups just price action speaks to you, right? And it tells you, this is what you need to do, and when you do it, it just works out. You know what I mean? Wonderful feeling, and that is the feeling that I want you all to be able to achieve, right? So for today's webinar, I've actually prepared a PowerPoint presentation. I've very nice. So we're going to talk about market structure, and this is actually part of my trading course that I'm working on. So you're going to see a little sneak peek of how that is going to be structured and how that might actually look. So market structure. Why is market structure important? Obviously, this is the backbone of TA. This is the backbone of trends. This is the backbone of price action. Market structure, right? Are we in an uptrend, downtrend, range, whatever, right? You have to identify the market structure to understand what type of market you are trading and what type of structure the asset you are going to trade is in, right? So, all right, yeah. Foundational price action, yes, where everything in TM begins. It tells you a story of trends in the market. Your job as a technical analyst is to look for, let price action speak to you and tell you a story, and that story is going to be a story of trends and market structure, right? So your job is to decipher the code, which is quite easy, right? So it's your job is to kind of decipher what price action is trying to tell you in terms of trends and stuff like that. Identifying market structure is key in identifying direction and trend. And obviously, when you find a trend, you have to ask yourself, how can I participate in this trend? There are different types of market structure. You have two types of structures, basically. You have ranging and trending, right? So you have ranging market structure and trending market structure. I'm pretty sure most of you are aware of that. In a trending market, you have uptrends and downtrends. And in a ranging market, price goes sideways. So we have price going up, uptrend, price going down, downtrend, price going sideways. You have a ranging market structure, sideways price action. And we want to focus, or at least I want to focus on, and I believe that most of you should be focused on the trending markets, where the market structure is either going up or down. And honestly, for the most part, I think it's beneficial to just ignore the ranges. Range trading, I think, should be the next step after learning how to trade a range, because that is the easiest type of trading. And I think that is how you learn the basis of trading. Now, with that said, there might be some of you who's starting out and you're looking at trend trading and you're looking at trending markets, and it just doesn't make sense to you. And this is very important to understand. You should not be a trend following trader if you don't think it feels right or if it doesn't make sense. If you are that type of person who feels like this makes no sense at all, well, maybe range trading is for you, because I've seen some people only trade ranges and they are phenomenally good at that, while I am better at trading trending markets. That is what I focus on, and I believe most of you should be focused on that. But of course, always be open to other ideas and techniques and methods. One very important part about with the idea of identifying market structure, I feel like I'm saying market structure millions of times, and I'm probably going to be saying that because it's all about market structure. You need to identify, or let me put it this way. If you have a trend, identifying the structure of that trend will tell you the behavior of the trend, right? So to understand the behavior of the current trend, you will also be able to identify changes in behavior. So if you have an uptrend and you see a possible change in behavior, well, that might mean you're entering a range or breaking the uptrend into a downtrend. So that would be a change in behavior of the trend, and that would be impossible to know unless you understand the market structure of that trend. So that's key, very, very key, to understand the behavior of market structure and look for clues of changes in behavior. Right. So here is I've showed you guys this on the webinar with horizontal support and resistances, because I said when I talked about horizontal support and resistances, I said that market structure is key. So I just gave you a quick crash course in market structure to let you just understand the basis. But here we're going to dive a little bit deeper. And I just want to say that if you take my webinar on risk management and then you look at the webinar on horizontal, well, first you should watch the webinar with Aperture where he talks about the basics of TA, right? So watch that one first, and then you watch the risk management webinar, and then you watch this webinar. And after this webinar, you watch the webinar with horizontal support and resistances. That's 4 webinars. And next week, I will host a webinar where I talk about taking profits, how I take profits and how you should be taking profits, how to use stop losses, where you should put the stop losses, and how I use the Fibonacci tool to help with that. That's 5 webinars. And if you combine all of these 5 webinars, you will have the basis of a trading system. You combine all the knowledge that you have in these 5 webinars, and you will be able to go out in the markets and start building ideas based on these setups and knowledge that I've given you. Do the back testing like I talked about in, I've actually also recorded a webinar on how to develop a trading system. So that should be the last webinar that you watch, the 6 webinars, right? Watch the webinar on how to develop a trading system where you combine all of this knowledge and you start back testing, right? So let's talk about market structure here. This first trend here is obviously an uptrend, right? You guys are probably familiar with that, right? But as you can see here, HH stands for higher high and HL stands for higher low. As you can see here, higher high and higher low. So obviously in an uptrend, you will have higher highs and higher lows. And every new peak is higher than the last peak, and every valley, if you will, is higher than the last valley. So you get peaks and valleys. It kind of goes like this, right? And we all know this. So this is key in identifying market structure. So when you look at trends, when you try to identify trends, and of course we're going to go into the actual markets, and what I like to do is when I do webinars like this, I like to not prepare the live charts. I just want to go into a random market and I'm going to identify the market structure of that market live, right? So you understand what I'm doing from scratch, right? So this is what we're going to be looking at later in the webinar in the live markets, right? And what you have right here is a higher high, right? And now we're going to be talking about the change in behavior, right? So here's a higher high, right? So you see price making a higher high, a higher low, and you expect price to make a new higher highs here, and then perhaps a new higher low here. But obviously that doesn't happen. You get a higher high, higher low, and then equal highs, right? Obviously, when price fails to break this last local high, like it did here, last local high, breakout. When it fails to break out, you have the first sign of a change in behavior. This is not a change in behavior, but it is part of the range. Where can we find the webinars he was just talking about? You can find them in the Congress announcement channel in the Discord server. That's where we have all the webinars. And I guess it would be good if I could compile a list of them perhaps. But you will find them in the announcement channel for the Congress in our Discord server. So, like I said, this is not a change in behavior, but it is part of the range. So you now have equal highs right here, and you're going to tell yourself that, all right, so let's say you entered here, right? Let's say you entered here, right here, okay? And you entered here on the break and retest, right? So you're watching price go up like this, right? And you're in this trade and you're in good profits. And you're going to say, like, at the first sign of a change in behavior, I'm out. And that would be this, right? All right, so if price can't get above this resistance area, that's the first sign of changing behavior, and I'm gonna get out, right? But when you have a equal highs, it's very possible that you're gonna see this, right? So what I'd like to do when I'm in a trade like this one, I'd like to say, if there's a break in the market structure, I'm gonna get out. Now, this is not really a break in market structure because you could get this, right? And then on the bigger scale, this market structure would still be bullish, but it would have a range in the middle of the trend. So if you have an uptrend, a range, and then an uptrend, that range would still be part of an overall bullish market structure. However, if you have a range like this and you break to the downside, now this is a break in market structure because you now have equal highs and equal lows. That's the first change of behavior. And you have now entered a range, and now you break down and you create a lower low, right? And when you have that bearish rejection at the range EQ, this is a very normal pattern, and most markets will move like this, not exactly like this, but they will move very similarly to this. This right here is a break in market structure, and then you start a downtrend, and then you have range again, and a break in market structure and an uptrend, right? So that's the basis of this, right? Now let's look at the next chart, right? So this is a break in market structure. Is there a reason why they were not in order? Well, I think that's just a failure on our part to organize it correctly. We just had different topics that we wanted to talk about, and then after the fact, I kind of figured out that there's a specific order to probably watch this. See, you can watch it in whatever order you want, but it's the way I would do it would be the order that I've talked about at the beginning. So I think this is a matter of a lot to do. Yes, okay. So this is a closer look at the break in market structure, right? So we have now identified the trends, right? And we now know that this is a downtrend, right? And let's say you're not in. Okay, so let's say this is Bitcoin, right? So the weekly and the daily charts for Bitcoin are absolutely fantastic, right? They're just absolutely beautiful. They're very bullish, very, very, very bullish. So obviously, if the daily and the weekly chart is very, very, very bullish, you don't want to be shorting the lower time frames, right? You don't want to be shorting against the higher time frame trend. And that is also very, very important to note here. The trend is your friend until the end of trend. You've heard that saying before, but that's because the primary trend is always going to dictate the high probability moves, right? So if you have a high time frame uptrend and you see a downtrend on the lower time frames, chances are that the bounces, the bullish bouncers, are going to be much stronger than the bearish rejections in that downtrend because you're going to be trading with the overall trend. So it's very, very important that you follow the overall trend. If the daily chart and the weekly chart is bullish, you don't want to be shorting the 4-hour because you're basically shorting a daily downtrend. And you can look at Bitcoin right now as a good example. And if you pull up the Bitcoin chart, you will see that you have an uptrend here on the daily, and we are right now testing an area here, right? So there's obviously a very good area for Bitcoin down here. So going down here would be just a bullish, and you can watch my Bitcoin report for this, right? I've talked about this. And this would just be a bullish throwback in an uptrend, just a higher high and higher low, right? Pretty perfect. Now, then you might say, well, if we're trading here right now and we're breaking down and we think we're going to hit that level, why not short this level, right? And that's that's not a dumb question, right? It's pretty logical. Why wouldn't you short here if you think that price hits this level? Well, the answer here is we don't know if price is going to hit this level, this level, this level, or this level. We just know that when it bounces, the chances are that the overall trend is going to continue. So it's better for you to look for a bounce to long than to short the breakdown. If it were a bearish market structure on the higher time frames, of course, in that case, it would be beneficial to short a breakdown if the daily and weekly were actually bearish, because then the moves to the downside will likely be stronger than the moves to the upside. So that's why you don't want to short the lower time frames in a high time frame bull market, because it's better to wait for price to come down here and then bounce somewhere around that area. And when you have a clear bounce, you want to go long instead, because the chances are much, much higher that price will bounce in an uptrend. So let's talk quickly about a break in market structure, right? So we've identified the downtrend right here. We know that we're in a downtrend right here. So let's say, the overall market is bullish, right? So we're not going to short this, right? We don't want to short this because the overall market is bullish. So this is not a downtrend we want to be shorting. We want to long this, right? And we want to long this when there's a bounce. And a great way to do this, let's say the chart that we're looking at right now looks like this on the daily, right? Just like I talked about, right? And this is the downtrend that we're seeing right now. This is a downtrend right now. So this right here is the 4-hour chart, right? And this right here is the daily chart. And you're seeing this on a daily and you're seeing this on the 4-hour, right? So when price comes down here and it's going to bounce, you see on the 4-hour a range, right? And then you see a break in market structure on the 4-hour and it looks like this on the daily. And that is what I do when I trade. That is what I do when I trade. I look at the daily. Are we hitting any interesting levels on the daily? And if we are, I go down to the lower time frames and I look for a break in market structure on the lower time frames. And here you can see that I've added a horizontal level, just like we looked at in the horizontal support and resistance webinar. And this is the break and retest strategy that I've talked about in that webinar, right? So you're seeing here how you get a downtrend, you enter a range, you have a high, a lower low, a lower high, a lower low, and then you get equal highs that are changing behavior. Now, the fact that you are getting a change in behavior should alert you to a possible trade coming. And here's the break in market structure. You're breaking above these highs. You have now broken the downtrend, and you've exited the low time frame accumulation area, right? Because at the top of the market, you usually have a distribution range, right? So you have an uptrend, you enter a distribution range, and you break down, downtrend, and at the bottom you enter a accumulation range, and that, the picture perfect downtrend, uptrend, accumulation range, and distribution range looks like in the picture before, right? So here you have a. How do I go back? I'm not sure how to go back. Yes, all right. So here you have distribution range, right? You have an uptrend, distribution range, downtrend, accumulation range, uptrend. And let me actually show you that on Bitcoin. Yeah, so this is Bitcoin right now, okay? This is actually a pretty good example of this, right? And like I said, it's not going to be perfect. It's not going to be perfect, right? But you use that perfect market structure image as a template, as a guide, right? So here you have, let's just say we have something like this. Let's just make this one move, right? Can make it white. So let's just make this one move. So that's one up move. That's a high, a higher low, higher high, higher low, higher high, higher low, higher high, and boom, lower low. Changing behavior, right? That's a change in behavior. Now, I'm also going to show you in a couple of minutes how you trend trade a trend, and how you can use moving averages to help with that. But here you have obviously a change in behavior, right? Change in behavior. You have a higher high and then a lower low, a major lower low. And what happens then is you have a lower high. And obviously this is the start of the downtrend, right? Because you now have higher high, lower low, downtrend, uptrend, right? And what do you have here is also a range. You could definitely say that this would be a range, with like range low being here and range high being here, right? So this is a pretty obvious distribution range for Bitcoin, right? So this is a pretty obvious distribution range for Bitcoin. What happens then is you form a downtrend, and this is probably a pretty obvious downtrend on the 4-hour, right? So you have a downtrend, and you then enter a accumulation range, right? Where people sell their position here, distribute their position here, they start buying their position here, they start accumulating Bitcoin here. And what do you see here at the end of the accumulation range? Well, you are seeing a break in market structure right here, where you print a higher high and then a higher low. So that is a break and retest of a pretty significant level and a break in market structure. And where have we seen this pattern before? Well, we have obviously seen it on this chart right here, right? Uptrend, distribution range, downtrend, accumulation range, uptrend. That is the picture perfect market structure that you should be looking at. And it's not going to be perfect, like I showed you here. It's not going to be perfect, but it's going to be somewhat similar, right? Now, how do you actually, now you know how to identify ranges and trends and that kind of stuff. So how do you actually trade the trend, and how do you put this into an actual trading system, right? So the way I do it is I like to use moving averages. Now you can of course use simple moving averages or exponential moving averages because I'm a day trader and I trade more frequently. I use the EMAs. A lot of people use the EMAs. The difference between EMA and SMAs is basically like EMAs are exponential moving averages and SMAs are simple moving averages. So the simple moving averages, like say for example, the daily 20 SMA is just you take the last 20 candles and you look at the average price of those candles, and that's the SMA. The EMA is you look at the 20 EMA on a daily, you look at the last 20 candles on a daily, and it's calculated in a way that more emphasis is put on the most recent candles. Now the mathematical calculation for that I have no idea, but I only know that it's calculated using it's more weighted towards the most recent candle. So I like that because that means it's going to react quicker to price, and I find that it works better than SMAs in my trading at least. So let's go and look at the 20. Let's see, we got the, so on this indicator right here, you will see that I have the 20, the 50, and the 100 EMA. The 20 is the yellow, the 50 is the green, and the 100 is the blue one right here. So you can see here that, looking at the daily, when prices is ranging, you have so this right here is obviously somewhat of a range on the daily. And yes, you have that move up, which kind of pulls the moving averages upwards, and you have a potential range, a potential trend forming here according to the moving averages, right? Because the 20 is above the 50 and the 50 is above the 100, and when you have that relationship, it means that the most recent price action is obviously going upwards in relationship to the previous price action. So it just means that new price action in relationship to old price action is in an uptrend. That's basically it, right? Because the average, the 20 candles average back in time is higher than the average of the 50 and so on and so forth. And when they cross to the downside, you will have that relationship turning bearish. That's just a simple idea of moving averages, right? And you see here that the moving averages are starting to kind of starting to turn bullish here, right? And you're seeing somewhat of a potential bullish trend forming here, right? So what you want to see in this case is like you're watching this and you're like, well, you know what? The moving averages are looking bullish. It looks like they might be starting a trend here on, and the EMAs have obviously already started the trend, But you want that to be confirmed in price actions. It's not like you're only going to look at moving average and like they are bullish, so I buy. That's not really how it works. You have to confirm this with price action, right? So looking at this chart right here, we don't really have a trend, right? We have a range like that. This, on the other hand, this is a trend, right? This is a trend, and it's a pretty nice trend. So that would be like a great buying opportunity. That would be a great buying opportunity. That would be a good buying opportunity. Obviously, that one would stop you out. But if you bought down here, obviously, you would probably have exited when you start seeing like this relationship where you have a break in market structure. But right here, I'd say that, you know, this is an uptrend, right, with higher highs and higher lows, and then you create a new higher high and, you know, higher high, higher low. But here you have a equal highs, right? Equal highs. So in that case right here, the moving averages isn't really giving you much. So you need to wait for price action to really confirm what the moving averages is showing you, right? So if we play forward right here and we see that, well, you know what, it's still a range, still a range. And now you see that the more price starts going sideways, the more the moving averages are going to compress, and they're going to come closer to each other, because obviously the 20 last candles are like, if you go sideways long enough, the 20 last candles are going to be the same price on average as the 50 last candles. So the 20 and the 50 are starting to crisscross each other, right? And that's not a trend. That is a very clear range, obviously, and also according to the EMAs. So when you see the EMAs nicely fanned out, like you're getting right here, that's a good indication of a healthy trend according to EMAs. But when you see them kind of compressing here again, you are kind of losing momentum of that trend. So what you see right here is price. You see the moving averages are now compressing, and obviously that's because we've been in a range for quite some time right here. So yes, it's a good idea not to take that trade, right? But as soon as we break out of this range, and this is what I'm talking about, right? As soon as you break out of this range right here, like we had right here, you're going to see the EMAs kind of start to fan out again, and you're most likely going to see the start of a new trend, right? So we've looked at the first examples, right? And now we're looking at this live. So you have an uptrend, range, a breakout, and this was the same here, uptrend. Let's call this distribution, downtrend. This was the Mars, this was the COVID crash. And then let's say accumulation, boom, uptrend, and then range, uptrend again. So let's see if we can start to, let's see if we can actually, you know, find a trade here, right? Let's find a trade here on the daily. And actually, I think it would be better to go on the 4 hour now to see if we can find a 4 hour trend, because we're looking at the daily, and we have now confirmed that the daily had a massive breakout. Let's go to the 4 hour to see if we can actually trade this trend according to the 4 hour moving averages, right? And here you can see that you have a clear trend here on the 4 hour, and it's not really a clear trend. It's quite parabolic almost. And it's very, very strong. This is not really the trends I like to trade. I want this to retrace down here and perhaps be buying down here, right? So let's see if we can get something here, right? So you're now hitting the 20 EMA on the 4 hour. Let's see if we have a deeper dip. Yeah, that's obviously a dip on the 4 hour. And if you kind of break out here, you might see a trend forming. So this is a good indication that, you know, look at the daily, you have a test of these highs right here. You kind of get front ran of these highs anyway, but you're kind of feeling that, you know, this, it's like this trend definitely wants to continue, and you also broken above this range right here, and it kind of looks like you have an uptrend range, uptrend. So I mean, logically, you might want to be buying like this, perhaps something like this. I'm not gonna follow any specific system here. I'm just gonna show you how you can use the moving averages to determine if the trend is bullish or bearish, or if you are looking for a change in behavior or whatever. But to me, this kind of looks quite bullish, you know. And you're now seeing a local uptrend right here. So that's a local uptrend right here, and you bought a dip on that uptrend. And it kind of makes sense for this to continue higher. But now you're seeing a break lower, right? So you're now seeing break lower. You have a Still somewhat of an uptrend, but now that you broke these lows right here, you're kind of breaking that local trend, and you're now in the range again, right? So let's say you hit TP1 here, right, and you took some profits here, move stops to entries. You're stopped out on this one with a small profit, and now you're seeing, you know, a change in behavior, because I would like to have seen this trend continue, like, but it broke that trend. It now created a you know, high low, and a lower low. So I'm not really liking that. So let's go to the daily. How's it looking on the daily? It's still an uptrend on the daily, so I'm still liking this on a daily, definitely. So let's see if we can get a bounce here on the 100 EMA to continue this uptrend right here. And yeah, it kind of looks like we're continuing the uptrend, but right now we have a high, a lower high, and a lower low, and potentially a lower low again, and that would be a downtrend. So we need to make sure that we have a break in market structure here before we enter this again. And now we're seeing something interesting, right? So that would be a low, higher low, a high, and a higher low. So let's see if we can get a new higher low somewhere in that area right there. Let's see if this works. And yeah, kind of, but it's not clear, so I can't really take this trade. So what I'm waiting for now is to see if we can break above this area, right? So can we break above this area, because this could also be viewed as a massive range, right? Like this, right? So can we break out of this range, because it's very messy. It's no clear range on the 4 hour. I want a very clear trend on the 4 hour. Breakout. You see, there's the breakout. So maybe you're a breakout trader, and you say, as soon as we have a tick above that high, I'm going to be entering. Yes, as soon as we exit this range, I'm just going to be entering, hoping for this trend to continue. So yeah, that kind of got fucked up. Let's forget that. So we now have a very clear uptrend here once again. So you can kind of view how that looks. Could look something like this, right? So now we're definitely seeing the same structure again, right? But the EMAs are not really very, very clear. So we still want to see like a reclaim of that blue box right here to really confirm it. And now what we're seeing now is the local trend. Local trend is breaking down. The 20 EMAs is crossing the 50 EMA to downside. This looks like we might have a break lower, right? So I'm not going to go long on this. I need to see a clear break in market structure, before I enter. And it's not really happening. We have a massive range right now. This is no trade for me at all. And here you can see how you kind of enter that range, and now you broke that range to the downside, and you're approaching nice levels on the daily, right? And you can now see on the daily that you have a nice rounded retest of this breakout level right here. Now this is interesting, right? Because if we have a bounce here, we could be looking at this as a massive trend. Like that. I'm hearing my son in the background, so I'm just waiting for him to raid my office. So now we're looking at this right now. So this could be a massive trend trade on the daily. So we're waiting for a bounce, right? So now let's go and look at the 4 hour. Will we see a range and a break in market structure on the 4 hour? Right, let's see. Breakdown. Look at a bounce on the 4 hour. See on the 1 hour. Can we see a break in market structure on the 1 hour? First we want to do is we want to add a trend line, like something like this, right? Never mind. Do we have a break in market structure here? Are we going to break the 1 hour trend here? And we're entering a range, what I'd like to call at this point a bullish range, because it has actually higher lows, right? So we got a range. Nothing's going on right here. There's a range on the 1 hour, clear range on the 4 hour, but now we also have it's a range in the 1 hour, but it's kind of like a trend on the 4 hour with lower highs and lower lows, right? So wait for breakout. And now the range is clear on the 4 hour as well. So we have a uptrend, massive sideways action range, downtrend. Could this be the uptrend, distribution, downtrend, accumulation? Hopefully that's what we get. I can't remember what Bitcoin did back here, so we just have to hope for the best and hope that I'm going to be able to trade this correctly. And let's see. Are we going to bounce? Well, there we go. I'd like to say that this is now somewhat of an uptrend on the 4 hour or potential uptrend, right? So go to the 1 hour. Can we trade this on the 1 hour? Yeah, I like that, right? I like that. So if you're going to take a swing position on this and you're going to say, like, I'm going to hold Bitcoin long term. I'm going to hold Bitcoin long term. You look at the daily and you're like, look at this beautiful, beautiful break and retest on a daily of the 10K area, right? Beautiful, right? And you look at the 4 hour, you've exiting the range, you have higher highs and high lows, and then you look at the 1 hour and you have that structure right there. So this would really confirm to me that it's a high time frame break and retest. It's a high time frame bottom. It's a very good range break and retest on the 4 hour, and it's absolutely beautiful on the 1 hour. So let's say you're very bullish on Bitcoin here. You're thinking, it might go to 20K again. So it's going to double in price from current levels. So you might be okay with taking a position here with a fairly wide stop loss, maybe even, let's say a 12% stop loss, or let's say 10% stop loss, right? For a potential gain of, let's do a risk to reward ratio on this, right? So you just enter here, right? This is obviously going to be a 12% stop loss, and then 20K. I mean, that's a very, very nice, almost 2x from current prices, and you have a 7R trade. Now, I don't know if this is going to work out, but logically, if this trend is going to continue, it would look something like this, and looking at the daily, this would probably be a pretty decent bottom for Bitcoin. Now, let's see if this actually plays out. I don't know. And then this price action here is very interesting, right? Because what's happening here is you get that range on the lower time frames, right? And then you have a break and retest of that range highs. And that is really, really how you get the best types of entries using this technique. Because if you then just put entry orders on the break and retest, and you say, I'm just going to put entry orders here and stop loss down here in hopes of this getting retested, and I'm going to show you something that I'm not really supposed to be showing in this webinar, but look at this, right? You know that I like using the fibs and the reload zone, right? And this is the reason for that. If you put on my reload zone template plus the 50, well, guess where the bounce is happening? You see, this is magic, right? Perfectly fills the reload zone. So if you see this move and you're like, well, you know what? I'm just going to be filling my orders right in the middle of that reload zone, stops below the daily level. And look at this. The risk to reward goes from 7 to 17. All right? If you're patient and have the discipline to wait for these setups, you're going to be making a shit ton of money by just applying very simple techniques of identifying market structure, breaking the market structure, and horizontal support and resistances. And all you do is you're going to trade the break and retest system. No indicators is needed for this. All right. So I don't know if this is going to get stopped out, but the risk to reward here is definitely favorable, right? So the risk to reward on this trade is definitely, I'm okay with getting stopped out on this. So let's see what actually happens here. I can't pull forward. I don't know what's going on. All right. So that's the bounce. And we can see how this plays. Let's just see how this goes, right? Yeah, I'm pretty sure most of you know how this will go. But just imagine if you would hold this until Bitcoin loses the 50 EMA. Right? We're using moving averages to determine the trend. Look at this right here. 50 EMA determines that trend. 50 EMA in a daily determines that trend. So imagine if you bought this very simple break and retest system using extremely simple techniques that I've showed you. It's taken 45 minutes to show you this, and this would have been the result. All right. So let's wait and see until Bitcoin breaks the 50 EMA with a daily open and close below. I mean, what the fuck, It's insane. Absolutely goddamn insane. Right, so there's the daily open and close below the 50 EMA right here. So that's a 76R trade. if you have the balls to hold a trade like this, you get these trades like maybe once a year. But if you learn how to stay in the trend and identify the beginning of the trend, which was obviously down here. It's obviously down here after the COVID crash, right? Do you see here? Downtrend, the break in market structure. You bought that, right? Ride that trend up, sell when there's a break in market structure here. You get the COVID crash and you started an uptrend. So let's say you want to be safe and you want to say, you know what? I still view this as a major accumulation area. So I'm going to wait for that accumulation area to break to the upside. I'm going to go long and break and retest off that area. Well, here's the daily round retest. You buy that and you're going to tell yourself, I'm just going to be selling when I have a break in the market structure. And yeah, the trend is actually very well and alive until you come up here and you form the distribution range, right? That's a 400% move on a 76R trade. This is possible, right? This is very, very possible. And I'm pretty sure that we did post a trade like this. Obviously, we didn't ride this to the top. Personally, I did sell up here, but I had my position on Bitcoin was not as big, and I didn't really start accumulating Bitcoin after the break of 20K. So I did not take this trade, but I took a similar trade where I did exit up here at the, and you can go back and probably look at the history of my tweets or whatever, and I'm pretty sure I was very vocal about the fact that when we have when Bitcoin loses daily 50 EMA, I'm going to exit the market, and I did, and we had that bullish break in the market structure, and the same thing happened when we reclaimed the daily 50 EMA. So I said I'm going to be buying Bitcoin again when we reclaim the 50 EMA, and the exit if we lose the daily 50 EMA with a break in market structure. So we had this right here, and then we reclaimed the daily 50 EMA right here with the higher high low, and that is somewhere around 40K is where I entered Bitcoin once again. And what we're seeing now is Bitcoin about to, and yes, I actually did exit Bitcoin here, but enter again as soon as we gain the 50 EMA. So right now we're trading right here, and we're testing the daily 50 EMA. And I'm actually not going to sell here. I'm actually not going to sell this time when we lose the daily 50 EMA. I'm actually going to sell if we lose the weekly 20 EMA, which is down here, because it has. I'm just thinking that the behavior of the daily 50 worked very well here, but we are seeing a slightly different behavior in a different market structure right now. So I can't really use, and this is something important. This is not really part of this webinar, but this is also something very important that you have to understand. You have to be adaptive to current market conditions. So in this trend right here, the daily 50 EMA worked beautifully. In this trend right here, it looks slightly different. And the fact that the break and retest here would just be absolutely fantastic on the 20 EMA and weekly. I'm going to use the 20 EMA and weekly as my invalidation level, and perhaps use a daily open and close, or even a weekly close below the weekly EMA. But looking at this trend right here, and always, like I've said in the past, you always have to prioritize horizontal levels and market structure. And you look at market structure and the horizontal levels right here, it's just obvious what's going on right here, and what type of levels we're seeing here below. So you have just a fantastic, obvious horizontal level that would be according to market structure as well. So it's important to note that if you can't just blindly go with one idea with the EMAs if it goes against market structure and horizontal level. Like I've said in the past, the indicators are there to confirm market structure and horizontal levels. It's not the other way around. So right here, the 50 EMA on the daily is definitely confirming this level right here. You see, the daily 50 EMA is confirming that level beautifully. Then below you have the 20 EMA on the daily, confirming that level very nicely. And down here you have the 50% fib, you have the reload zone down here. So that is what I'm focusing on this time around, is the daily 50 EMA. That's great that it holds this level, and because of that fact, I bought more Bitcoin on this test, because I think the likelihood of this level holding is actually quite high. But then if we drop, the likelihood of seeing a bounce is very high down here, and that is why I will buy more Bitcoin down here. But if we start to lose the reload zone, well, then we have a potential bearish market structure on Bitcoin, and that might be when we see the end of the bull market, right? Because like, seriously, we can't just expect the bull market to continue till the end of the year or 1 year in forward, or 6 months. We have to follow price action. We have to tell ourselves that I don't care how long the bull market goes, and I don't have any goals for how long the bull market should go on, because nobody knows how long the bull market will go on. All we know is the bull market ends when the bull market ends, and it's going to be quite obvious in price action when the bull market ends. If this daily trend here fails, like, we want to see this, right? But what if we see this? Would you still consider the bull market to be on? Well, I wouldn't, because it's such an obvious break in market structure on the higher time frames, and I would bet on the bull market to be over if that's the case, right? And then you look at downside potential. Well, yes, obviously 20K looks like a fantastic target, or even, you know, the area between like 15 to 20K. Yeah, that would be a great area for a potential new major accumulation area to form, like this one, and then start a new bull market, right? And or like the what I think is the more probable scenario is we see Bitcoin do this instead, right? And I think this is the most probable scenario. We see Bitcoin do this instead. And then we accumulate down in this area, right? Somewhere here. I think that would be like the more probable area. Now, I don't know if it's going to happen, you know, up in the $200 area or the 300,000 or something like that. But I think it's probable for Bitcoin to have a major breakout and a continuation of this trend, and then use the 50 to 60K area as our new major support. But if we break down now, we have to look much lower for a major support. All right, this stuff. Weird. Got some weird noise outside. I gotta check that out. So yeah, all of this is very simple, very easy to apply to the charts, and it's basically all you need. And then you start adding indicators. So market structure, horizontal level, that's all you need. All right, guys, it's been an hour already, and I would like to thank you all for joining. I'm gonna go through see if I have any questions. So there's not really any questions on market structure. I'm gonna keep this strictly to market structure. Anyway, guys, I would like to thank you all for joining, and I will see you guys in my next webinars. And later today, I will have a Bitcoin update for you. So I will basically do the written Bitcoin report, but in video format. All right, thanks for joining, and see you guys in the next one.